Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. I'm here on the floor of the CME Group in New York with Jeff Grossman, president of BRG Energy. Jeff, thanks very much for coming on the show.
Happy to be here.
Okay, energy. First thing I'm going to throw at you is if we look at crude oil, it's been very, very stable for a long period of time, basically trading around the $100 a barrel mark. Is this surprising to you, particularly given what's going on in the Middle East, the geopolitical backdrop, the situation with Russia and Ukraine? I mean, we're really kind of trading on both sides of $100.
Well, we're only trading around $100 just recently. We were up about $105, $107 just recently. So the market has come down here. This is probably closer to the fair value that we should be trading at, all things considered.
But you're still talking like single-digit percentage points above and below 100. So, I mean, it's relatively stable, right?
Well, a 1% to 2% move is considerable amount of money being exchanged here. You're talking about a dollar in crude, is a serious move. So I don't belittle that amount of movement, that's for sure.
Noted. Now, let's look a little bit about the inventory situation. I think in the most recent energy agency release, about 375 million barrels on the crude. That's down. I think that's down at about the lowest level since March, if I'm not mistaken on that. We're about 25 million off of the highs. I mean, that would inject some bullishness into the market.
You could make that scenario, but the truth is it's more than ample inventory. I'm the first one. I've been proposing that for a long time, that we do have certainly ample inventories, and there's never been an issue where we are really concerned about that. So I don't worry about that. We're functioning just fine. There hasn't been any sort of disruptions or anything to be concerned with.
Now, here's a subject that I've been discussing actually with another member here, Anthony Grisanti, is the recent opening up in the United States of crude exports for the first time in 40 years. And my contention has been, once you start exporting, your price tends to gravitate towards the world price, which is, again, about 10, maybe 15% higher. Is this a good policy, in your opinion? Because, I mean, we have a bounty now of energy, of crude and natural gas. So, and it's something we've been saying for a long time, energy independence, right? That's been the phrase. So let's export it away?
Well, we're not giving away the mother lode. We are going to participate in the world market. That's still very much down the road as far as a real active aspect of our economy. But it's a message to the world. It keeps everyone more honest, and that's the way it is, a global economy. So I have no problem with us, since we do have ample inventories, to send some out there. That's certainly the way to go.
What sort of, now, given the geopolitical backdrop that we've seen recently, Middle East, Russia, Ukraine, sanctions from the United States on Russia, do you sense any sort of tension or nervousness, maybe not yet reflected in the price, but what's the talk out there? What's the chatter?
There's always the talk that there could be a real disruption. Unfortunately, or fortunately, however you want to look at it, it really hasn't happened. The whole situation in Iraq got everyone on edge, got us up to about 107 or so. People were talking $110, $120. But the truth be told, there was never any sort of disruption. In fact, as we've always discussed, even though it may be a geopolitical issue or something, it's not about disruption, it's about control. And when you talk about this kind of turmoil, it's people fighting for the control of the oil, and they're certainly not going to disrupt the production and distribution of it.
Okay, which leads me into the flip side of that discussion. We've been talking about potentially higher prices. What about potentially lower prices? I mean, let's face it, we have record crude production. The United States has regained the mantle of the largest oil producer in the world, surpassing Saudi Arabia and Russia, and we're not seeing prices come down, really.
Well, the prices always go down a lot slower in general. But I would say this, a fair pricing for what we're talking about now, I would say could be about the mid-80s. I could see that coming even, let's say, by year's end, if nothing else comes out from left field. Again, we're talking about everything calm and normal. I would think the inventories and demand is not as, let's say, bullish as that people want to make it. So I would think we could gravitate lower. It's not going to happen right away. Believe me, there's still that last thing that people have in the back of their minds of some sort of disruption.
Now, a lot of people, obviously, it's summertime, it's driving season. A lot of people go to the gas station to fill up. They're looking at those prices. Give us a little bit of a sense of the spread between gasoline and crude. Is it on the high side? How does it look?
Funny you should mention that. In the last couple of days, that's what's called the crack value. That's gasoline against the crude has come in sharply. We're talking over the last 2.5 days. It's come in about $4 or so. It's bouncing back off of the lows right now as we speak. But the truth of the matter is, the gasoline, which is I always consider the leading indicator at this time of the year, has really taken it on the chin in the last couple of sessions.
Well, that's a good sign for consumers, right?
No question
now,
about
when you say it's a leading indicator, do you mean it's a leading indicator for the economy, or do you mean it's a leading indicator for the crude complex, the energy, or both?
Well, both, but I truthfully, as I always say, refined products do determine. Again, if there's demand for gas, there's demand for crude, and if there's no demand for gas, there's less demand also for crude. So I always look at them as, let's say, the swing items. And let's say we're in driving season right now, and that would be the indicator. If there's a tremendous driving season and they're drawing down the gasoline, they're going to draw down the crude also.
Well, we should be right now into the strong part of the driving season, correct?
We are, and what's shaking out as right now is demand has been on the wane somewhat. That's a price effective kind of a item here, and what we're seeing now is a bit of a back off here. So I think everyone's going to see a little bit of improvement in their gas prices in the next couple of weeks.
Now, as a trader, as an investor, I'm sure you glance from time to time at the stock market, at equities, and you see Dow Jones making record highs. Does that sort of seem odd to you when you look at what we just spoke about? For example, weakness in gasoline, maybe some other indicators pointing to some weakness in the economy.
Well, again, I always do keep an eye on the Dow. A strong stock market, means a strong economy, which means more business, which means more driving.
Do you trade off of that?
It's one of the factors you keep an eye on. It's hard when the stock market's roaring. Let's say if it's a strong day to be thinking short, energy, because usually there's this symbiotic relationship between the two. So again, they don't go in lockstep, and there's a lot of times there's a disconnect, and sometimes you've got to throw one out when you're looking at the game, because there are certain technical things that take over. But it's one of the pieces of the puzzle. Look at it, and it is a puzzle.
It is a puzzle. Let's turn to the puzzle of natural gas quickly, which it looks to be like in a slowly rising uptrend. Is this just a correction in a secular bear market, or have we really seen the bottom in natural gas?
Well, I think we have. In fact, this market has come off pretty sharply in the last couple of weeks. A little bit of a surprise. A lot of people are playing the hurricane lottery, as we always call it. At this time of year, At this time of year, people start buying, let's say now we're trading around $4, they're buying the $5, $6, $7 calls for, let's say, the fall, hoping for a major disruption in the Gulf, and that's the lottery ticket. More times than not, it doesn't come to fruition, but that's the game that's played. Now, today we had a number that came out, which was quite disappointing. There is more than ample inventories, which everyone really knew, but again, we'll see how much lower it can go. I don't think much lower, because again, that when you talked about uncertainty, we could have some weather that comes into play come September, October that could change things.
So very much sentiment driven, at least right now, weather driven, people looking for maybe the announcement of some tropical storm.
They're banking on it. That's the game. It's the hurricane lottery.
So if we have a quiet season, we can expect some more.
Well, you're going to have, as with everything, you'll have a lot of longs that have no place to go, and there's only one door, and you got to get out. That's the problem.
All right. Well, I don't think anybody's wishing for another Sandy superstorm. That's for sure.
It's like with anything. Unfortunately, as a commodity trader, sometimes natural disasters, turmoil, unrest are the things that do drive markets to a large degree, and that can be good for profit.
All right, well said, Jeff. Thank you very much. Really appreciate it.
Pleasure.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.